So hello everyone guys, and today we are gonna talk about one simple trading strategy where we are gonna use Fibonacci retracement, discount and premium market. This strategy is part of smart money concept, and of course if you follow it, you will increase your win rate and earnings 2 times. So don't forget to drop likes, watch video till the end where I'm gonna show you one simple trick that will help you to trade consistently and reduce your losses on the bad trades. And don't forget to follow all my socials. So let's begin from the definition of premium and discount market. Here you can see the example. To define premium and discount market, you need to take the Fibonacci retracement tool and place it from the highest point of the beginning of movement to the lowest. It's in case where the trend is bearish and in opposite way when the trend is bullish. So premium and discount market are separated by the meanings of 0.5 Fibonacci retracement, discount market on the top and premium market on the low. Discount market shows us a price zone where the price are oversold, where the price are too high and smart money traders could sell there. So it is gonna look like that because my previous chart was inverted. So the premium market on the top, it's the zone where the price are too high for buying it and the smart money traders need to sell in this situation because it is overhyped, and sweeping zone to the discount market helps us to accumulate fair value gaps, bearish order block, liquidity zones and other things, and after hitting the premium market the price are gonna go down. And discount market is the place where the price are too low and where smart money can easily buy it by the lowest price. It is a good point of correction, and which instruments you can use to trade in premium market is fair value gap, buy stops liquidity, bearish order block, bearish breaker block, bearish mitigation block and wicks. And in discount market, fair value gap, sell stop loss liquidity, bullish order block, bullish breaker block, bullish mitigation block and pick. So now let's watch the algorithm of trading smart money premium and discount market. So you see an impulsive movement which are turned into sideways movement, and the price shows us correction. If impulsive movement was bullish, we need to place Fibonacci retracement tool from the lowest point to the highest. Determine our 50% zone and our premium and discount market. After that, if you see, like on this example, the price situated in the premium market, we need to wait for the correction and of course place on the left side on the chart our point of interest. Let's think what's here. We see the PG on the left side. On the left side we can see our high updating of our high, and it means was the price are going to go higher in this point, but it needs to follow the higher low, and we are waiting for the forming high low in our point of interest zone. And already from mid we are 100% sure that the price will go up from discount market to premium market, and in that case in this zone we need to go to the deeper time frames. For example, if we now trade on 4 hours, we need to move to the 1 hour time frame and watch our confirmations in 1 hour time frame in our point of interest zone, for example for the our order blocks or PG zones. And of course don't forget about the capturing of liquidity, like on this example here we grab a lot of liquidity, and after that the price shows us another impulsive movement, and if the price are gonna return to the discount market in the next time it will reverse higher, but always price can break all our plans and switch it movement from the bullish to the bearish. And don't forget discount market on the bottom because we can get by the lowest price, and premium market on the top because it is the highest price by which traders can buy. And now we can move to the real chart example, but before the real charts we can see the another situation. If we invert our chart we can see the forming of higher lows, and after that we need to replace premium and discount market here, and on the bottom discount and premium on the top. And after that we have a downtrend movement with the capturing of this liquidity. Here we have our point of interest zone, e.g. bullish breaker block and down things, and from that we can enter for the correction. And of course if we enter on the correction we need to place a conservative stop loss or risky. We need to define if we can place the stop loss on the our high or high low. You need to make it like that because you increase your risk reward ratio, and and you decrease your chances of being liquidated. And on the bullish markets, it works the same way. So now let's move to the real chart. So now we are on the real chart example on the UI, DX, and here let's make it wide. So now we can see the forming of impulsive movement, of the impulsive growing movement, and we need to place a Fibonacci grid from the lowest point to the highest. And after that, we determine our premium and discount market. So on the bottom we have our discount market, and on the bottom premium market. And after that, we need to determine our reverse movement as down trend. Here we can see the down trend movement, but here what things we can see. Here we updated our high highs, and here we updated our high low, high high, and here we are forming impulsive liquidity grab, and in this case here forming our order block. After this movement, we can place a simple deal like that for the 50% of our order block, and the liquidity grab shows us a good confirmation for entering the position. We can place a conservative stop loss if good risk reward ratio. Let's place our take profit on the capturing of liquidity, and of course you can save your money here about 50%, 30% higher, and 100% here. And let's watch an our deal. Bam, very successful deal. Let's go for the next example. So here are now example of our Fibonacci with Maya retracement trading premium discount market strategy. So now what we can see on this example, here format our sideways movement, and what we need to do in sideways movement, we need to determine our point of interest zones and wait for the capturing the price by it. And of course here on the top you can see our EVG zone. We has a downtrend movement but price attached higher than this candle. We are going to wait for the reverse of it, and of course here we can see a little point of interest zones on which we can enter, but I am going to hunt for the high move. So now let's watch for the price distribution. So now for these candles we can feel our price, we're going to touch our order block zone, and we need to place a deal like that is a stop loss for when with liquidity pool, and place our take profit like that. And if you are a risky person, you can place it as a capturing of UG, and let's watch for the deal. And of course here we can see additional factors for the trigger deal. It is risk, liquidity grab, and risk. Let's watch. Here we can already fix our 60% of view, and we are already in plus. So now a successful view. And now let's watch what will happen if we enter from this UG zone after capturing of liquidity. Let's make the take profit safer, and the take profit are gonna like on this minutes, and let's watch. So and now success review just one sideways move guys, incredible strategy. So and don't forget what this strategy has higher win rate in sideways movement. And of course you can enter from additional zones. For example, you can mark VG here or order block here, and enter for this zone and wait for turning into red zone, and after that wait for the narrow correction. But in this case you need to don't forget to fix your trade by parts. And now let's look for my nowadays trading strategy, trading plan. Here I mentioned our premium and discount mark, the terminal point of interest zone is gonna be the Fuji, place a conservative stop loss like that. Yes, here we get a bad risk reward ratio, but in this case I don't see. And now a good placement for our trade. Here's a good trade are gonna be only in case if you are good and risky consistent trader. You can place the stop loss like that, and you get a better risk reward ratio. And now let's watch for the real-time sample. Here we can see the impulsive movement like that. Let's place the Fibonacci retracement tool to determine our premium and discount market. Here has premium, here we has a discount market, and we can see several zones from which price can get reaction. The first, it is get already from it. It's fulfill 5G order block here to another place. 5G here, it is situated exactly in our optimal trading entry point. And of course, to be 100% sure in this trade, you need to enter from this zone, because here it has PG what are fulfilled, and after that here from our order block, and there are several places when you can enter a very good D. Here it can be risky, and I don't recommend to enter from it. Here it has a wonderful PG from which we can enter, but here you need to place a safer stop loss in my opinion. For example, like that and that was good there. But if we place a deal from this point, place a like that. I can't say, but it is gonna be a great deal because on the left side of the chart is a higher point. We don't have any zones from which the price can reverse, and it is gonna enter and is gonna reach only the liquidity gap, but I don't see the perspective in that deal. And if you're gonna trade, I prefer enter from these zones and get a good risk reward ratio. So thank you guys for watching. Don't forget to follow all my social links below, drop your likes and subscribe my channel. Goodbye.